And now, please welcome co-founder and CEO of Blueground, Alex Chatzieleftheriou, and president and CEO of Furnished Finder, Jeff Hurst, in discussion with Skift editor-in-chief, Sarah Kopit.
So hello, thank you so much for coming. We had to get our mics done, get our makeup on, you know, all that good stuff. Thank you both for being here today. So good to see so many CEOs and people in the audience that are gonna very much enjoy our conversation about medium-term rentals. So we're at a short-term rental summit, but I'm curious to hear about medium-term rentals and what they are, who the customer is. Let's level set here, because this is a little bit different than what we've been talking about for the majority of the day.
All right, so when we think about midterm rental marketplace at Furnished Finder, customers, tenants versus landlords, which is, different nomenclature than the prior 10 years of my life. But the landlords, basically about half of them only do midterm rental as a strategy.
Okay.
About a quarter of them also do short term, and about a quarter of them also do long term. On the tenant side, they are overwhelmingly either corporate travel or traveling like medical. And then there's a group of people that are either academics or relocations. So you're, pipes break and you need a place while your house is being repaired, or you're in like a buy-rent transition or buy-sell transition. And so the average stay is really long. It's like 90 days for us compared to short term.
Yeah. And who are your customers and what are their needs?
Yes. So as you mentioned, how do we define midterm rental? So it's 1 to 12 months. So people are saying this duration, our average stay is similar to yours, about 3 months. 50% of our clients are actually businesses. So that includes enterprises, corporates, government, embassies, etc. That typically these are people that are traveling for business, relocation, short-term projects, etc. And the other 50% is individuals, which again it is mostly work-related. Yeah. So they find a new job, and they could be moving in for a few months or even a year. Actually, half of our revenue comes from people staying with us for a year or more. So this kind of is borderline between midterm and long term, and that's why I think it's very important for operators to play in this market, because you have so much different use cases and different segments, and and it's a different market to play compared to the shorter term, which typically below 30 days. So just a little bit about Blueground. So we have 15,000 apartments in 32 markets, so we play globally, and we see consistency in the types of use cases or guests that we're seeing.
So we just had a panel that I did about an hour ago about regulation, and I did a little bit of research, and I wrote a story for Skift not too long ago where the medium-term rental was the compromise position for many small towns and residential areas that they didn't want to ban short-term rentals, so they're like, well, we'll just ban them for under 30 days, a la medium-term rentals are here to stay. Do you think that is a good compromise position, and does that affect your business very much, or is that really not the market that you're looking for anyway?
You're in the business of selling monthly rentals.
Yeah.
A regulation that makes everything less than your business illegal is excellent for us.
Yeah.
And so I don't think it's a good civic compromise.
Right.
I do think that it is a big part of what's making our marketplace grow faster. Is places like New York or Las Vegas or Los Angeles or Dallas or Denver, or there's a lot of us there. When the inventory that's short term no longer has the chance to do that, they typically go midterm, and because they're already furnished. And so you're either faced with a buy-sell decision or a move into the midterm market.
Yeah.
Yeah, I think it's the 30 days is not an arbitrary number, right? So typically, and most of our clients are people moving into the city, right? They're not just visiting for leisure.
Yeah.
So that means that the reason that that 30-day makes a difference is that they're trying to ban or reduce when someone is just moving in for leisure just for a few days. So when you play in 30-day plus rental space, there's much less threat for any regulation coming in. So in the vast majority of markets, there's, it is classified as residential real estate, so you don't have a risk of having any issues. There are only a few markets. San Francisco, for example, proper has put a limit on the number of medium-term rental apartments you can have. But in general, most markets around the world, that's good. So And I don't expect that to change in the future. So it's a good way to also, for short-term rental operators, to diversify and have that other option in case there's regulation changes in the markets.
So talking of markets, what is the market demand for medium-term rentals? And can you talk a little bit about how it fundamentally differs from both, a long-term lease and short-term rentals?
Yeah, so the market is, I typically think about it in two groups. Mm-hmm. One is that 1 to 6 month stays, which are typically people, as I mentioned before, coming indeed in that market for a few months with the potential of extending, but it could be a project. So that market is relatively big. You have thousands of apartments in each of the major city. And it's out there. There's undersupply consistently in all the markets because landlords don't want to furnish apartments, don't want to give apartments for just a few months. Most operators play in that below 30-day space where they can. So this is a segment that's been relatively underserved. That's there. It's big and it's growing. I would say double digits. But the bigger one, which is more interesting to me, and we're really going quite aggressively after, is that 6 to 12 plus month stays. These are people that typically will rent an unfurnished apartment and buy furniture because they didn't have any other option, right? Because landlords don't want to do that. So they want to furnish for them. So right now we have 50%, as I mentioned, of our revenue coming from that segment. And it's growing very, very aggressively. We have a dedicated product for that called the Live at Blueground. So where basically you can rent for a year, but you can freeze your lease and you can move around if you want to. So for example, I'm from Greece originally. I live in New York, but I'm paying Blueground customer for 8 years. I'm a Live at Blueground customer. So what I do is in the summer, I go back to Greece. So I freeze my lease in New York. I don't have to pay a lease in New York and a lease in Athens. So that way I'm very flexible. So we see that growing, and it's another way to increase, let's say, get access to more clients in that segment, which has been very strategic for us.
Yeah, what I'd add, and this is from some data from Google that's up on the monitor, the tenant and the supply side are growing really fast. Yeah. And it reminds me, I was there right after Carl, but it reminds me of early vacation rental days in terms of the dynamics we see here. And so on the tenant side, there's a great value proposition versus hotels, in particular when you're staying 30, 60, 90 days or longer. And I do think, what Alex is describing on kind of live anywhere is a real trend that we're seeing show up more and more. The supply side, I think, is even more interesting in that there's regulatory pressure from short term. And then on the long-term side, there's not a very liquid sales market, and there's a lot more vacant rental inventory. There's 44 million rental homes in the U.S. There's 7 million short-term rentals. My guess is there's almost 2 million-ish furnished midterm rentals in the U.S. We have about 300,000 on our platform, and it's growing really fast on both sides of the marketplace. And so I think it's a very exciting time, but it feels very different than short-term rentals. Yeah. This is around like schools and hospitals and commuter corridors. It's not in Panama City. It's not in many of those cities that were up earlier on the top destinations.
Yeah, so when we're talking about the homeowner, I talked to one homeowner who was regulated out of a short-term rental, so she converted to a medium-term rental. This was in Illinois, and she said she figures she's out like $1,500 a month. So I'm curious for the hosts, what are the profit margins like for them, and is that typical that like somebody who's converting from a short-term rental would make maybe less money in the short term, more money in the long term, or how do you see that? How do you sell the proposition to the homeowner?
Yeah, it's so almost all of our inventory is for rent by owner, and so it is a lot of those individual micropreneurs. The dynamic we see with it is that if you've got a 4-bedroom in Aspen and it's a short-term rental, like you are going to make less money as a midterm rental. Sure. Like it's very hard to get the math to work in the leisure destinations with the larger properties. Our properties, half of them only have 1 bedroom, and so it's a very different footprint. And so the transition, because there's an inventory mismatch, makes it a tough analogy. You'll make less money in midterm. You'll make about 1.5 to 2 times the rent as long term. And if you have the right configured unit, I think you'll make more money and definitely more cash on cash return in midterm than you would in short or long. but there aren't a lot of people trading out of like a duplex in Round Rock, Texas versus a short-term rental. Like they're different use cases. And so for investors, I think it's really attractive. For people who are often regulated out of short-term, it's a strategy, maybe your only one, but it does not replace what you lost pre-regulation.
Gotcha. Do you find a similar situation?
Yeah, I mean, I fully agree with Jeff. It really depends on the location, the type of asset. So for us, we mainly focus on urban center, like cities, core areas. In this case, there are areas where you can make more money even with midterm, but in general, short-term could be more lucrative. However, you need to factor in, which many operators don't do, occupancy gaps, other costs, right? Because it's different to have a check-in, 10 check-ins a month versus one check-in every 4 months, right? So especially if your costs are incremental, right? You have to hire a cleaning service. So if you factor all that in, it becomes much closer than you think. So I think it's really the way we work with our partners, because we have what we call a partner network. We have more than 50 operators on our platform advertising on Blueground. So we really focus with them and talk about like what the location of the asset, how should they price. Pricing is very different. How do we market, and how just to account for all those costs when they price accurately. But yeah, it's a case by case, as Jeff mentioned.
I'm curious about what the data says about the impact of medium-term rentals on the community. The short-term rentals get a lot of flack about, even though our guests earlier today, said probably wasn't the case, but about driving up housing prices, pricing out locals, that sort of thing. Do you get that pushback on medium-term rentals? And what does the data say about it? Like, is it a fair argument against?
The way we describe our platform, which really grew a lot during COVID, is that I think it's a neighborhood asset. And so in many ways, it's actually like a hero use case for travel, because, traveling medical professional is going to be there, a 90-day corporate stay for an executive who might be relocating, or a family whose roof just burned down and they're trying to like stay close to their school or their commute. And so like some of these homes in most communities, I think, are a real asset, because they're helping displaced people and helping people explore and find mobility in a way that people don't buy into as much with short-term rentals and the stigma around not in my backyard.
Do you get, though, the same pushback? Like, or is that really not the case with medium-term rentals at all?
I think it is fairly hard right now to get the same pushback against 30 days after most cities in America spent the last 10 years deciding that was the right place to be.
Gotcha.
How do it's a tough backtrack.
Yeah.
Yeah, I think it's, for me, it goes back to the point that I mentioned before, like a lot of those people are moving into the city, right? So they would rent an apartment, they would buy furniture in many of our cases. So effectively we're just upgrading that apartment, making it easier for them to move in. So it's not the same because of that. And so that makes a big difference. And I think it's different if let's say you live in a building and you have someone changing every 6 months versus someone having 10 tenants a month. So I don't think it's comparable.
So the cave people, the citizens against everything, they don't bother you guys too much.
Well, it's in regulation, really, like as I mentioned, San Francisco, and it's pretty clear cut. I mean, you've seen some in LA in some neighborhoods, but in Europe, some other markets, as you know, like Dubai, for example, went the other way. And they can also do one-day stays in any apartment. But in Europe, it's mainly that 1 month duration. There's exception. Berlin is 3 months, Singapore is 3 months, but in general, that 1 month is kind of commonly accepted.
Personal statistics, and I might have a brand awareness problem for Furnished Finder, but the velocity of complaints I got as president of Verbo versus CEO of Furnished Finder is very lopsided.
Yeah.
And so I think that it's a good sign that we're an asset more than we are a hindrance.
All right, so switching gears just for a moment, I'm curious if you could talk and tell the audience a little bit about what the operational challenges are of medium-term rentals versus short-term rentals, because I think we all kind of have a little bit of an understanding of the challenges of short-term rentals, but it must be really different for medium-term rentals.
I'd say the challenges are fewer and further between.
Okay.
And so, you really think about it, a well-running MTR is going to have 3 to 4 turnovers a year. You're going to have a lower management cost structure. In general, you're going to have a tenant who's there for a very different use case. Someone is there because they need to go to work 4 days a week, or they need to go to be in this place, but it is a very different occasion than my family or 2 families are bringing a dog and like have all of these like
Not
activity.
too many parties.
And so it has, I think that the experience of management feels more like long-term rental.
Yeah.
The AC broke, or there's something, wrong with trash collection or whatever, but it is much more about, are you paying the utilities, and then are you in a position from a marketing standpoint, there's a lot of opportunity for us, but just the category to figure out how to get more people familiar with it.
Yeah.
And, I think a lot of that on the OTA side is a challenge of, if you're paying Airbnb 10%, and you're a nurse who makes $80,000 a year, traveling 9 months, Airbnb is going to make more than a week of your after-tax salary over the course of doing that for a year. So you're willing to put in some work in order to find a place that helps you save that money.
Yeah.
Yeah, just to add, operationally, fully agree with Jeff. It's easier, right, as you mentioned. I think there's different from a pricing and, let's say, visibility standpoint. So pricing is very different. You have to, there's no pricing system out there, right?
Yeah.
You have for hospitality, you have for long-term rentals, but you don't have for mid-term rentals. So you have to do much more work. Maybe there's a couple coming up, but there's nothing really established. So that's something that you have to do differently. At Blueground, we help with that because we run 15,000 apartments ourselves. So we do the end-to-end pricing piece. And then visibility, people are not sure where to go for midterm rental, right?
Yeah.
So when someone is looking for that, they might go on Airbnb, they might Google, furnished apartment, might go on real estate classified. So you want to be everywhere that you can be visible. Furnished Finder obviously being one of the major channels. So you want to be there, because people don't know where to go. So that is another difference. I think short-term rental, you can go, you have a channel manager, you list some of major websites, they connect with everything else. The other piece is a little bit more manual.
Yeah, we actually have a question from the audience, kind of similar to this. It says, does medium-term rental inventory have a discovery and awareness problem versus short-term rental, which I think you just said, yes, it does. And so how are you fixing to solve for this? How are you going to raise awareness?
Yeah, I think it's just, if you're an operator, discovery from the clients is what I said, just being visible in all the available markets. And the pricing is important, right? Because you might have a price that won't convert, right? So you have to factor in all that cost. I think as a sector, let's say, longer term, just having more good supply out there, people having the option of staying 6 months, a year, furnished, and then can go to another market and stay. Because right now, they're kind of stuck. They go out of university, let's say. Not everyone wants to buy furniture. I haven't bought a single piece of furniture in my life, but it's not. Some people don't want to do that, right? So, and I think it could be 5-10% of renters, but they don't have the option. They go, they buy their stuff. They might buy some IKEA or some other furniture they would throw away after 2-3 years. So right now, I think in the longer term, we need more supply out there. So that leads into more people going to that lifestyle. We started in Athens, Greece. When we started in Athens, we had 5% furnished supply in the overall rental inventory. Now it's 40%. So we changed completely the market because we started from there. We're the biggest company, biggest startup coming from there. So I think that changed the landlords, how they think about furnishing apartments. I think that will happen in more markets as we go.
Are you looking to make yourself a verb like Airbnb?
Verb, noun, we'd take either of them. I think I think that the opportunity we see, though, when I look back on the vacation rental journey, we're past the place of most people are scared of or won't stay in someone else's home.
Right.
So there's a category benefit now versus what we went through at HomeAway and with Airbnb. The big tailwind is going to be referral, and that was really the same for vacation rentals. People stay in a place like this, they love it, and they tell people about it. And the advantage is providing a place where they can find all of this without, an Airbnb feature that helps you have 5 different homes for a 3-month stay. They don't actually want that. Similar to how they don't need a Zillow home that's unfurnished. Yeah. And so I think it is going to be, awareness marketing, but it's mainly going to be referral and how you get people to tell each other about this great way to save money and explore cities.
So we got another question from the audience about friction, and there's no instant book. And so the audience is wondering if you have figured out a way to solve for this.
On Blueground, there is an instant book. So.
Okay. On Furnished Finder, there is not. I think the the right way to think about that is when we survey our tenants and what they like about our service. One, it's really low weight. And so they like that it's cheap. It's $150 a year and there's no booking fees. And so a lot of people are willing to do some work for that, to save the 10% that goes along with Instant Book. They like that they can talk to a landlord in advance and learn more about this place they might be going to spend 4 months instead of a long weekend. And so there's a communication aspect that we think right now doesn't behoove itself to Instant Book. And when you look at the kind of barbell of the category, short-term rental, basically all Instant Book now, almost no exceptions. Long-term rental, if you're on Zillow or Redfin or any CoStar product, basically no Instant Book options. And so there's something in the middle, and I'm not positive how it'll evolve, but I think it will evolve a little bit more like the long-term space, where you have people who are still signing leases, getting into a place where there's more security around tenants' rights, and going through a process that feels more like signing a lease than basically paying for a weekend or week-long getaway.
Just to add to that, I think definitely right. Like it has more touch points, right? That's why, as Jeff mentioned. So I think we're stuck in the middle between longer-term rentals, where people want to go view the property. You're going to stay for a year. Like it's not enough to do it. Some people might do it, but for the majority wants to view. And then short-term, if you go towards like a week or even a month, people might book instantly. So you have different flavors, and ideal is if you can accommodate both, in my opinion. Like people, there will be a segment of people that they want to book, they don't want to go through the viewing, they'll be there for a month or two. Others that want to do the viewing. Can you accommodate both? You're going to get the most success from clients.
One other thing that's interesting about the way the midterm calendar works, it's rare to have bookings out in the future. And so more than half of the bookings we see actually extend. And so there's a conversation to be had around, hey, you're going to be here for 3 months, but you might end up being there for 6 months. And some of that conversation around availability of the unit and what it's going to look like in the future is what I think kind of the chessboard of a short-term rental calendar makes more challenging. You're always taking bookings up to 12 months or 6 months out, which often prohibits your ability to take a 3-month booking in the middle because there's one weekend booked. And so that dynamic, we'll see how it plays out. I tend to agree with Alex. Over the longer horizon, it's probably both.
Yeah.
For now, we think it has more in common with long.
We had a slide up not too long ago that talked about how midterm rentals had 6 times the growth in search versus short-term rentals. So do you have any sense of how much that is because of short-term rental legislation or regulation?
My sense is almost none, because that's more of a tenant, more of a tenant demand-driven type of statistic. I don't know if you'd have a different point of view, Alex.
No, I agree. I mean, it's on the verge. Someone might go, 3 weeks and say, okay, I'm going to stay for a month. But in general, I fully agree. And I think it's also what we see in our demographics, like younger people tend to be a bigger part of our clients. So it's 25, 44, and people just coming out of university. They just don't want to go traditionally buy furniture. They don't know. They want to be more mobile. So I think that drives a lot. That emerging demographic drives a lot of that demand.
Once they started, they being the royal they, started sending people back to work at the office more, did you see a precipitous drop in digital nomads, or do you still have a lot of digital nomads out there roaming, working?
Yeah, I think the notion of digital nomad was like a software engineer, staying in a very remote place. It's kind of changed now. There's many more people doing that, more nomadic. Like in theory, me spending 2 months or 1 month in the summer in Greece, also have this midterm rental client, even though I'm not digital nomad. A lot of people are like that. So there are more people. I think there was a drop after a lot of companies asked people to come back to the office. But still, if I remember the number correct, we're about 7 to 8%, let's call it, that have this nomadic kind of. So we didn't see a drop. I think the lack of supply is still the main issue, right? So people, it would continue to grow, but the supply is causing that. It's kind of a chicken and egg, right? If you don't have the supply, you have to buy furniture. So, but yeah, to your question, we didn't see any significant drop.
Yes, similar for us. Those top categories we shared earlier, everything's growing, 50%-ish year on year, including digital nomad and people who basically choose to live in midterm rental accommodations. The only exception for us is traveling healthcare, which is obviously coming off of the most mobility it will ever have. And so I think I think the opportunity to serve that segment well, both the youth and then I think in particular actually aging population, where there's a lot of people we used to call snowbirds in Texas who actually go live someone for months at a time, are going to explore different platforms and probably have more word of mouth effect for people who are going to go live 2 months in Austin by their grandchildren or 3 months here, for the summer in a way that's not really a short-term rental, but is going to be a big part of a growing category that feels more like living somewhere than vacationing somewhere.
Yeah, so that was actually my next and last question for today. Like, look out, I don't know, near term, 1 to 3 years, maybe medium term. Where do you see this market going in the next 3 years?
I think the main thing will be continued growth of supply. I see a lot of like new buildings coming in. They have 50% furnished, 30% furnished. So that's going to be a growing market. I think on the demand side, I don't see any reason to be, for that to go down. Up to now, it hasn't grown so much because of the landlords don't want to do that, which is normal. They don't want to take this work on. But now there are many companies, there are developers, new property managers coming in the game. So I think it's going to be growth of supply and growth in demand in the next few years.
It's going to grow multiples faster than short-term or long-term over the next 5 to 10 years. There's just too many reasons on both sides that capital and tenants are going to want to meet in the middle, because there's more money to be made than one side, and also, I think, a better experience with fewer fees than the other.
Thank you very much, Jeff, Alex. Thank you for being here.
Thank you.